Hi everyone, this is Matt Curfman from Richmond Brothers here with the Matt's Minutes edition for April of 2019. Well, now that we're a little bit into May when I'm recording this, I'm sure all of you are happy, or most of you are happy, that the tax season is behind us. A number of our clients found, especially retirees who didn't have a lot of deductions, some positive surprises with the standard deduction for married filing joint going up to $24,000 this past year. I know that didn't benefit all of you, so we'll keep an eye and try to help you through that process when we get into 2019 taxes. So what's going on right now? April was kind of a blah sort of month. That said, we're getting into a lot of U.S. and China tariffs, trade wars, that sort of discussion. And many of you who have stayed up on Matt's Minutes remember in the earlier ones this year, I mentioned last fall we had the midterm elections, we had the longest government shutdown in history, we had the Federal Reserve in December coming out and saying they were going to keep raising interest rates, and we also had U.S. and China as constant headlines, even going back into the fall. 3 of those 4, as you may remember, are behind us. The government is open, elections are concluded, whether we agree or not, they're concluded. And then also the government, I said the government's open, but now we know the Federal Reserve has gotten to the point in March where they're going to effectively pause interest rates. So the last outstanding item has really been the U.S. and China trade relations, and that's causing some volatility, which is really declining market values. But for some perspective, year to date, as of 11 o'clock this morning when I was recording this, the S&P was still about 13% positive year to date, and that's off a little bit from the highs. The Dow was around 9.5%, and again off from the highs. And then the aggregate core bond index was up maybe about 2% year to date. So we still have a little bit of a cushion that has been built in the first 3-4 months of the year. And I think that when we get an outcome, whether it's this month or possibly in June with respect to the trade wars in U.S. and China, we do think that has the probability of creating a little bit more of a relief rally. And the reason we suggest that is although the Federal Reserve has paused interest rates, what they're really seeing is there's not a lot of inflationary pressure right now. Now the other argument is that the economy is starting to slow down, and I think that's okay too. Realize the economy is still growing. Data has come out that suggested in the last 12 months GDP, gross domestic product, has been at an average rate of around 3%, and that was the rate for the first quarter. It was 3.1 or 3.2%. So that's still a very positive and very growing economy, so we're not worried that things are going to tip over right now. We do think as you get into 2020, probably mid to the second half of the year, based on what we know now, we still want to be cautious about the potential for whatever could cause the next recession. So for now, we're not going to be looking to make any major changes, as I've stated before. As we keep going through the year, we're going to continue to look to reduce equity exposure. So skim from the top and build in more safety nets, build in more downside protection. And that could be in the form of cash and money markets. It could be low duration bonds. It could be guaranteed things that would be fixed annuities, CDs, treasuries, that sort of thing. So keep that in mind, and we don't see any massive changes. One of our core values, in fact, in May is pursue growth and continuous learning. And so just as a note, many of you saw that Dan Vredeveld, my counterpart, just came back from Ed Slott training, and Ed is one of the elite trainers. He's a CPA and trains advisors like myself, other CPAs, accountants, and even lawyers on IRA tax law. And it's critically important. And why is it important? It's some of most of your assets. And so we get a lot of education on that, and so we try to stay in tune, especially with all the tax law changes. So just wanted to let you know we are out there working for you even when we're not physically in the office. Thank you so much for tuning in. And if you have any questions, as always, feel free to reach out, questions@richmondbrothers.com.